Hey, welcome back to our Technical Analysis Daily Stock Series. Today we're going to cover one of my favorite ETFs, and that's the Semiconductor Index, symbol SMH. And today is Saturday, October the 26th, 2019, and I'm your host, Eric. So let's start off with just a view of the chart over the last year, last 12 months. You can see it's had a few pullbacks, but largely this has been an upward move for the entire year of 2019. It obviously took a hit in late 2018 when the first news started to break about the possibility of a trade war with China. And this is one of those industries that would be significantly affected by it. But you see, we've had strength all year. Pullback back in May resulted in a continuation of the upward trend, the upward channel. So let's look at the moving averages. So here's a look at the 1 year, and for the most part, as of right now at least, the moving averages are all in line. You have the 10 higher than the 20, higher than the 50 day. And that is a clear indication that the stock will go a little bit higher, or at least is positioned to go higher. And we can see that it stayed pretty much there, except during times of pullback, which we expect. But we haven't had a whole lot of time this year with like middling markets and whatnot. It's been fairly directional. Even in the pullback, if you look back in May, you had a situation where the 50 was above, the 20 was above the 10. Of course, if you waited for these to cross, normally you make decisions. The way I typically trade is I'll make decisions based on the crossing of the moving averages. If I were just going to use the moving average, make decisions based on the crossing. The buy and sells are going to be based on the crossing of my 10 and 20 day. But I always want to be aware of where they are in relation to the 50 day, which is a much longer moving average. Now here's a look at the 5-year chart, and we do see a significant period back in Q4 of 2017 through the first half of 2018 of channeling markets, and I try my best to avoid channeling markets. And also back in 2015, we had some channeling as well. Otherwise, there've been a few pullbacks, but largely this has been an upward trending move, and the moving averages seem to confirm that, especially from the period of midway through 2016 until you got into the channeling markets of 2018. Now here's a look at the MACD. Now normally before looking at the MACD, I look at the Fibonacci retracement. The reason I'm not doing that tonight is because there really hasn't been a pullback. If we go back to this 5-year chart, I mean the one pullback, true pullback, we didn't have a partial retracement. We had a 100% retracement, a slight pullback, and then another 100%. So when we're getting 100% retracements over and over again, I don't look at that as a Fibonacci-based pullback. I tend to see it as an upward moving channel because you're getting higher highs and higher lows. Let's see. Okay, so here's the MACD. And again, in trending markets, it's a little harder to find relevance here. But we are seeing some points, like in early 2019, we had a buy signal. This crossing below the zero line is a strong buy all the way up to what would have been a sell up in these parts. What I don't like is when you have trending markets and you get these sort of these patterns that are all above the zero line or all below the zero line. Here you had a cross up top. I don't know that I actually would have caught that trade because I would have been looking for false signals over here, and then you had the fall, of course. What I do prefer is to look at all these prices not only based on a moving average, and the MACD line is based on moving average. It's the MACD, MACD stands for moving average convergence, divergence. So, and it tends to measure or be a measure of momentum in a specific direction. So it certainly has a lot of value. But this is what I like more, is pulling out my pen, pulling out a ruler, or in this scenario, using a computer program to clearly visualize the channel that has been going on, or looking for strength and resistance lines. So obviously I'm looking at this as a much wider, longer upward trending channel. Right now I'm showing the top of that channel being closer to $136 per share. We are down $9 lower, just about at $127 per share. So something to keep an eye on, something to look at, but I certainly am not big on selling this sort of pattern. So let's go ahead and get into our summary of SMH. So this stock has been in a strong upward move for several years once again, and the moving averages are in line with the continued move higher. The Fibonacci retracement is really irrelevant because we haven't had any true retracements. They all were 100%, and there are only a couple of them. The MACD has less value because for the most part this has been a one-directional trade. However, there are a couple of points where it would have been good to take advantage of the key indicators of buying when the signals cross below the zero line, and then selling when they cross above the zero line. That last piece, that selling piece, because we're in an upward trend, has less value. I'd be less likely to actually make a trading decision based on that. And then finally, I looked at an upward trending channel on the 1-year chart, and I see that as very bullish. That is, to me, the most bullish indicator of anything that we looked at today. So I would strongly advise against selling these patterns. If you're going to trade them, trade with the trend. I always like the old axiom, the trend is your friend, because selling and trying to capture a retracing, not retracing, but having a contrarian view of this market may be a very expensive play. If I were going to have a contrarian view where I expect the market to go lower, I would do things like, maybe buying put spreads where you're going to be able to pick up the premium for fairly cheap, and if you have even the slightest pullback, you'll get a bounce or a pop in the value, the market value of those the put spreads. So that might be a way to play it. I certainly am not a fan of selling call spreads into strength, not unless you really know what you're doing and have a couple of other options on how to structure it. So that's it. I hope you guys are enjoying these videos. Thank you so much for listening. Share it with a friend. If you get value out of it, they probably will too. And that's all I've got for you. Happy trading.